Yeah.
Well, Andy, couple questions. It's been a while since we talked about this, and right now I've seen a lot of investors buying in Birmingham, a lot of movement over here in the Birmingham area and the counties around the metro area as well. And I noticed that some of these people are coming with DSCR loans.
Yes.
So, for those who don't know or don't remember, can you tell us what a DSCR loan is?
Absolutely. So DSCR stands for Debt Service Coverage Ratio. So when you go on a game show and you're asked the question, now you'll know the answer and you could win the game show with that answer. In the real world, it doesn't mean a whole lot other than it's a type of loan for investment properties only. Investment properties only, where the rent received on that property every month is what's used to offset or qualify the buyer for the mortgage payment. So we don't have to have pay stubs or tax returns or W-2s or any income documentation for a buyer in this situation. And the property is what qualifies the buyer. And so the other stipulations for the loan program are that the buyers need to have good credit. Generally, our DSCR loans will go down to 680, 660 is about the lowest that we can find for a DSCR program. And one thing to keep in mind for buyers out there is the lower your credit score, the more down payment you're going to have to put, and the higher the interest rate is going to be on the program. So kind of keep that in mind. It's very wise for you to have excellent credit or do what you can do leading up to wanting to buy an investment property with a DSCR loan to raise your credit scores. So, you know, we have people who come in and they'll be in that 700 range for a credit score, which is a good credit score.
Correct.
And we'll quote them an interest rate and they'll say, well, that rate's high. And I'll run a scenario for them and just say, well, if you had a 740 credit score, here's what your interest rate would be. And it's significantly lower. So for those of you who are thinking you may want to buy some investment properties and purchase them through these DSCR loans or with these DSCR loans, if you've got credit card debt, you may want to pay the balances down on the credit cards, and that will help to bring up the credit scores. If you've got some late payments, then work on either getting those late payments deleted from your credit or burying those late payments. And that's a term that I use that people may not be familiar with, but it essentially is just getting so many accounts on your credit, good accounts on your credit, that the bad accounts have less weight on your credit scores. And so burying is a good way to get your scores up. It does take some time, but here's the thing, and we've talked about this a good bit. Sales prices are going to continue to go up in the Birmingham area. So if you have to wait 12 months to buy an investment property, there's a good chance you're going to pay a little bit more for it. But if that's how long it takes you to work on your credit, to improve your credit to where you can qualify for one of these DSCR loans, then take the time and do it and take the necessary steps to get your scores up. It can make a fairly significant difference in your interest rate. Now, I'll back up a little bit and I'll say this. If the property cash flows, and that's the key here, the property has to cash flow, meaning the rent received each month has to cover the mortgage payment with property taxes, with homeowners insurance included, with flood insurance included if that's applicable, and with homeowners association dues included if that is applicable as well. So as long as the rent covers that full PITI payment, principal, interest, taxes, and insurance payment, then go ahead and buy it. Buy that property today. Your rate's going to be a little bit higher, but then start working on your credit, get your credit improved, and we can come back and refinance that loan for you in 6 months or 12 months or 24 months, however long you need. But at least in this case, you would go ahead and get that property in your name at today's prices, and then you can work on improving the interest rate. But these DSCR loans, they're extremely popular right now, and for good reason, because generally they're a little bit easier to get. We usually have fewer questions come up with these types of loans because we're not supplying income documentation. So that's a good thing to do.
Now, let me ask you this. DSCR loan, that only applies for multi-units, or that can be for single-family units, as long as an income-producing property is considered an investment property?
Correct. So, yeah, that's a great question, Tony. And the DSCR loans can be used for single-family residence and multifamily properties as well. We have an investor that'll go all the way up to 8 units. So a small apartment complex would be something that would fall into that window.
So now, if they, let's say they apply for a DSCR loan, identify one property, and let's talk it's a single family residence. And then during the process, we found 2 more properties. Can we use the same application for the 3 properties, or we need to apply for each property in a different way?
Yeah, so here's the thing. We would need 3 different applications. And what we would do is we could use the same credit report.
Okay.
Now, there's a little trick to that because we won't be able to close on all 3 properties at the same time.
Mm-hmm.
So don't plan on going to the closing table to close on all 3 of those with one sitting at the attorney's office. But what we can do is we can close one today. Theoretically, we could close the second one tomorrow and then the third one the day after that, because on the loan application for the second property, we have to include the first property on that application.
Okay.
And the same with the third. We have to include the first and the second on that loan application, because otherwise the application is not correct, it's not complete. And the last thing we ever want to have to do is deal with a lender who says, hey, you defrauded us. You knew you were getting these other 2, buying these other 2 properties, and you did not include them on the loan application.
Okay.
So in the past, though, that was not an issue because the loan application did not specifically address that. But now the loan application specifically addresses, are you going to be applying for a mortgage on another, to purchase another property or to refinance another property while this mortgage is being processed?
Okay. And that would be 3 different applications. I understand that, but it will be 3 different loans, or they're going to be just one loan for 3 different properties?
Yes. So in that case, that would be 3 separate loans. Now, here's
if
one
we
of the
found the 3 properties at the same time and we decide to make the offers at the same time, this is 3 different properties, 3 tax IDs, 3 different, then can we just make just one application, or still is going to be 3 applications and still is going to be 3 loans?
So here's one thing about the DSCR loans. This is going to be a long answer to your question. But here's the thing about the DSCR loans. So one of the things that I like about DSCR loans is that there are no standard set of guidelines for them. lender A over here may have, oh, they'll have their own guidelines. Lender B over here will have a different set of guidelines with little minor differences between B and A. Lender C over here is going to have a different set of guidelines. So with all that being said, I do have a couple of lenders that will consider a DSCR loan as a portfolio product, meaning we could take a portfolio of properties, I'm sorry, and put them into one loan.
Yeah.
Now that's not going to be a guarantee that we're going to be able to do that, but it is something that we can look at. And generally what I tell buyers is, let's research it, but be open to separating them and doing 3 loans, because if I can get you a better interest rate doing on 3 loans, doing those loans separately compared to doing 1 loan and 1 closing for 3 properties included in that 1 loan, then maybe that's the better way to go. So we can run numbers, run scenarios, and just make sure that we're going the best route for the buyers.
Correct. Because I've seen that in some of the properties right now that I have some listings. I have some investors that they sell in the properties after, they 5-7 years that they have it, and I seen at least on tax record, when we look at it, you see a house that is worth $150,000, but it was purchased for $2.5 million. So it make you, wonder, wait, what happened over here? Even for comparables, you need to know that when you see a house with a high purchase amount, it probably was a portfolio loan. Probably they bought 5, 6, 7 properties at once, and they put them all together in just one loan. And I've seen a lot of those lately too.
Yeah.
So it's maybe in that case for them it was better to do the portfolio loan than just do it individually.
Yeah, and if someone's buying 6, 10, 12 different properties at one time, then I'm going to say most likely it is better to do a portfolio product, because instead of having 6, 10, or 12 different closings, paying 6 times almost $1,000 in closing attorney's fees, then there's an opportunity to save some money. Now, that type of closing is not going to be a plain Jane $1,000 sit at the closing attorney or the title company's office and close a loan. They're going to charge a little extra, but it won't be 10 times $1,000 or 6 times $1,000 for closing fee. So it can be a good opportunity for an investor to save some money in closing costs by buying a portfolio at one time and financing those with one loan.
Yeah, most definitely. I truly believe that. And, the good thing about it is, yes, you have to have a good credit, most definitely. And usually there is also, you have to put some down payment. What's the range? 10%, 20%, 30%. And that depends on case by case. But in general, we're talking about like a 30% probably.
Yeah, so we can do a DSCR loan down to a 15% down payment. But I would say most investors are putting anywhere between 20 and 30%. That 30% mark for someone with good credit is really the sweet spot. And what I mean by that is it's a sweet spot with the interest rate, because if an investor is going to put down 30% and they have a 740 plus credit score, 9 times out of 10, I can get that buyer a better interest rate on a DSCR loan than I can with a traditional Fannie Mae or Freddie Mac mortgage, a conventional loan. So that really is that sweet spot. But, this is a topic we've touched on in a couple of other videos. Leverage. Leverage is extremely important for real estate investors. And if
Correct.
someone has a mind to buy more investment properties in the future, and they're not just going to buy one and be done, then instead of putting 30% down on a $150,000 house, why don't you put down 15% on a $150,000 house and buy two of them?
Correct.
And so that's really where things can come into play. And the interest rate is something that we can always come back and revisit after 2, 3, 5 years down the line, after that buyer has gotten some, or that real estate investor has gotten some equity built up in that property through property appreciation and through paying the mortgage down some, the mortgage balance down. So,
and keep in mind also that, rents can be increased, especially if you're buying in areas where there is no rent control.
That's right. That's exactly right. Yeah. And that's something that we're seeing a good bit. I don't know, a lot of real estate investors in their leases will have a provision in the lease that the rent will increase by 1%, 2%, 3% per year automatically.
Yes.
But then there's a lot of investors that don't have anything like that at all in their lease. And if you get a long-term tenant in your property who's leasing that property from you, or been leasing it for 5 to 10 years, and you haven't gone up on the rents, there's a trade-off there, and you know it as well as I do because you have investment properties. Having a great tenant is so very important, but leaving money on the table by not increasing your rents along with the market as the market rate determines, not terribly smart.
Now, this DSCR loan is when we refer to income property, also we're talking about commercial property. Let's say somebody wants to buy a small shopping center or a property with 3, 4 different tenants, or a restaurant, one of the cell phone companies, and things like that. We can use that DSCR loan as well for those, right?
They can be used for commercial properties. So that's something to look at. Now, we at Gagliano Mortgage, we don't do commercial properties like that. And so I would have to just kind of step back at that point and say, hey, I'm not the expert here on that. But I do know that there are some opportunities out there for commercial properties to use this type of product.
Well, while our clients graduate from multifamily and residential income properties, they can, use the DSCRs and buy as many properties they can that bring in a monthly rent and maintaining. I think they can be used for properties also with Section 8 in it. That's almost a guarantee income as long the property is maintained. And, you get inspected once a year. They get requalified once a year, and you can, request the housing authority also to go and do a reevaluation anytime you increase the rent. And as long as you keep up with the property and maintaining the property in good shape, you won't have no problem on that one.
Yeah.
So I like that. I appreciate that you letting us know. I know it's more to talk about it, but this is a great idea for somebody who wants to get their feet wet, feet in the water with residential income.
Absolutely.
Not using their own income, but rather what the property income is producing.
Yeah. And I'll tell you this very quickly. I did a loan. It's been, I don't know, a year and a half, 2 years ago now, for someone who lives in California, and he works in the film industry. At the time, the film industry was on strike.
Ooh.
he was out of work, not getting a regular paycheck, but yet we were able to close on a DSCR loan for him because we didn't have to verify employment, verify income. And so there are a lot of really good opportunities out there, you know, and you think about the self-employed buyers who own a business, and maybe this past year they claimed deductions for, maybe they bought 10 vehicles for their business. And so their income on their tax return was very low compared to what it normally is. Well, that could keep them from qualifying to get a mortgage. But they could do one of these DSCR loans, and now we don't even have to, we're not even going to ask for tax returns.
Yeah.
So it's a great way to get buyers to qualify, and it's just an easy program for first-time investors to get in and get their feet wet. And I want to throw out one other thing before we wrap up, and I'll use this as my closing statement here. For real estate investors, if you're going to open or start an LLC to put your investment properties into, you need to run that LLC like it is a business. And I'm not going to get into the legalities of the LLC because there are a lot of really good small business attorneys out there that can tell you as far as day-to-day operations, holding shareholder meetings and that type of thing, board of director meetings, that type of stuff. They can advise you on that. But where I'm going with this from the mortgage standpoint is, if you end up buying one property or 10 properties and you put them into this LLC, you need to pay. Well, first of all, you should go to the bank and open an account, a business account in the name of that LLC, and you should run every expense, management expense, mortgage expense, everything through that company account, and do not commingle those funds between your business, the LLC that's holding the rental properties, and your personal account. Do not do that. Pay it if you run that company account down to zero and you need money into to go into that account to pay something, to pay a contractor or something like that, then you can write a check from your personal account and put that into your business account. But don't write that check from your personal account directly to pay for that service. Move the money from your personal account to your business account, and then let your business pay that bill that needs to be paid. So that's going to help keep things very clean for mortgage purposes. It's going to help keep things very clean for tax purposes. And I'm going to say it, even though I just said I'm not the legal expert, it's going to help protect you if a judge ever tries to pierce the corporate veil of your LLC and come after you personally for some sort of whatever somebody may come after you for. So
that's a great advice, Andy. Thank you very much. We definitely we need to think into that, and that's an advice that I give some people also. You know, do not commingle your account. Your personal account is one thing, and your business account is something different. And let's handle it that way. That's what a lot of successful investors do, and you know, we got to do what the successful people does.
That's right.
Andy, if people want to know more about it, DSCR loans, and get more information, how can they contact you?
Yeah, I can be reached at 205-979-4412. I'm at extension 1. How about you, Tony?
Well, if you need to find a property to apply and use the DSCR loan that Andy is going to help you with, just call me at 205-370-3248. And I'll be more than happy to help you and guide you in the purchase of your next investment property. So, Andy, once again, thank you for being with us this week, and I'll see you next week, my friend.
Sounds great, Tony. Have a great week.
Take care.
All right, you too. Goodbye.